Hello traders, John at StockBookie.com. Today we're looking at the SPY, the IWM, the Qs, the DIA, the IYT, the USO, the UUP, and the GLD. We follow the daily, weekly, monthly timeframes. We use technical analysis here at StockBookie.com. Go to our website, sign up for more videos like this. It's StockBookie.com. Email alerts when we go to our live sessions, intraday action. We actually did one last night. Had a great time, went over a lot of different things, and just stuff like that. StockBookie.com, come on, sign up. It's free. What do you have to lose? So let's get right to the daily SPY. Today, old grandma gave us a little lip service today. She did raise the rates, and the markets rejoiced about the free money policy starting to go away. But the one thing that caught my eye were the banks, the Goldman Sachs, the JPM, the Wells Fargo. Didn't like that so much. So we'll see what happens in the next couple weeks with this rate hike. Guys, the markets are addicted to the free money policy, so it's going to be interesting what happens in the next couple of weeks. If the volume remains, fairly light, I think on the closing print, I think we had probably about 80 million on the day, so still 95 is not terrible, but usually on a Fed day, guys, at least a couple years back, at least, we had 5 million on the day. If you go back in time, I can't go back that far with the 10-minute chart, but there were days where Fed comes out, you get 20 million spike. So this tells me there's no participation in these markets. And when there's no participation by the big institutions and they're not doing anything, this markets can float up. And it seems to me they're going to get more and more retail traders in with the hype. You get a 112-point day on the Dow up. Everyone's excited. That just makes people buy. Oh my gosh, it's going up without me. I have to hurry up. So just be real careful in these markets, guys. So we bounced off the 20 MA from the other day, came right back into this upper trend line. We filled the gap and it kept on going. Still not back at the all-time highs. If you're bullish, you need to get back above these trend lines, back above the 240.32 area. Then if we do that, we're going to the 242.39. There's one more area here about 252.14. 250 round whole number will be a big one too, but I wouldn't rule that out if you are on the bullish side. If you're bearish, you need to come right back down, get below the 20 MA, which is going to be a tough task. This is going old Grandma Yellen's goal in life. Every time it goes below, it pops right back above like magic and just keeps on going. So you have to respect that. But until this thing starts to break down, if it ever does, we'll just watch for patterns and watch where this thing drops. But again, if you're bearish, you need to get back below the 20 MA. Come below this pivot here. You got a couple gaps to fill. You still have some fib levels as well. But at this point, nothing wrong. Still above the moving averages. So, we'll see what happens tomorrow and Friday, and then we'll go from there. And we'll look at the weekly chart too on Friday when we get the weekly close. The IWM looking a little bit weak down here, was holding this trend line from before below the MAs, and pop goes the weasel right back above the 50 at least, but it's stalled out at the 20. Let's see tomorrow if we get more follow through. If you are bullish on the IWM or the Russell, it needs to get above this yellow line, which is the 20 MA, fill the gap, and then go attack the 140 area once again. Once it went up there the last couple times, came right back in. Now we're bouncing on rejoicing to take the free money policy away from Wall Street. I mean, that's good, guys, taking all the free money policy. Unbelievable. It's been going on forever, guys. So just, keep in mind that we're back above the 50 MA. Nothing wrong with these charts. Just kind of floating around on low volume. We did have a little bit of a volume pickup here, but nothing crazy as we pulled back. But keep an eye on volume on Thursday, Friday. If it remains light, I wouldn't doubt if we float right back up. If it starts to come in a little more heavier, then expect a little more downside. But again, we're going to take each day as it comes, and we're going to have to trade what they give us. That's all we can really do. Qs makes a new all-time high, breaking out, bullish pattern here above the MAs. Here we go again, just like they did here, pulled back. Now let's see some follow-through. If this thing continues with some follow-through and gets a little more volume going too, on a push, you could see 133, 134, and possibly 135. Again, we'll take it each and every day. If you are bullish, that's what you're looking for. If you're bearish, you want this thing to turn around and pretty much get below this MA, fill the gap, and then continue to roll down. Then we'll wait for a bullish pattern or something like that and see where we go from there. Again, nothing wrong with these charts. Light volume's been holding them up. You have some consolidation sideways. This one could pop up a little more. The DIA, same thing, holding the 20 MA, holding gap fill, chopping around, slightly bearish, nothing crazy. It needs to start continuing up back into the 211.59 area. If it's just chopping around again, for another week or so, I would expect lower prices, but we'll keep an eye on this one. First, we got to get over, the double top, or the high from 3 days ago, the red bar, kind of an inside bar pattern popped up today. Couldn't get above it and close. We'll keep an eye on this. If it continues going sideways, we have a good chance of it falling down. If you're bullish, you need to get above the all-time high again and continue rolling. You could go to 215, you could go to 220 for all I know. We'll take it one day at a time. It needs to first get above the all-time high, and we'll go from there. If this thing continues down, or if it starts to move down, excuse me, you're looking for double bottom again, get below the 20 MA, and then, pretty much there's gap fill here, gap fill there. A couple gaps to be filled. You have the 50 MA support. You have a couple trend lines. I'm going to draw those in later on today, but they get extended. But until it comes back down, then we'll take a look, see if it comes, chops, or if it pops up and goes, keeps on going. We'll see. If the markets stay light volume, we can continue to go up. But with the Fed rate hike, hard to say. They're digesting it today, maybe the rest of the week, and we'll go from there. The IYT now, on the other hand, we tried to break out, came right back into this key trend line. This is where we bounced today with the Fed too. Everything pretty much bounced, but how convenient. This thing goes right into this trend line, and then we got a pretty good day up, and this one just starts to rip 1.2%. Wow, what a coincidence. It couldn't have just stayed here and then went up. It had to come into support and then get the bounce, because people are buying the dip down here. I think we even filled the gap too. So, and then boom, right back up. And still nothing wrong with this. Still holding the trend line. But the only problem is you're back below the 50 and the 20. You need to get back above this area and then continue up and attack the all-time highs. And this one can possibly continue on an upward trend. At this point, really nothing to do. I'm waiting for more sideways action, or does it get above, or does it start coming in? Right now it's not giving us much. If you are short from up in this area, double top, just tighten those stops up just in case if it does, move up. But if it does keep consolidating sideways on this big trend line down here, which is apparently support, I'd expect lower prices to come. I still think it can make it here to 151 if and when the markets start to sell. Again, if they start to sell, they're starting to make me almost bearish or bullish. Oil, the USO, again, we talked about this gap fill, $10 even number. Almost made it there yesterday. Boom, right back up, came back, filled the gap up here, and kept roaring and soaring, 19 cents up. Took the SCO trade down, which good thing we sold another half of the half. We are only in a quarter position now of the SCO. So let this thing retrace back up into this area. If it goes up here, I'll be taking the SCO long again. Right now I have a quarter position in my USO. I'm in the money still, so I'll see if this thing's just going to chop around and set up to go lower, or does it continue to bounce? We'll see. With the Fed and the central bankers and the dollar today is really one of those things where it's like, you know what, let this stuff settle down. Let's see where it goes, and then we'll take it from there. But right now, it is catching a bid. We did get back above this little pivot here around the 1028, and we closed. So slightly right now, a little bit bearish, but right now you could get a retrace on an oversold condition. So keep an eye on that, especially if you're shorting this thing or trying to go long. You get another 50 cents out of it or so, you just get the heck out. Yeah, and then if you look, we'll look on the daily on Friday. Let's get into the UUP. UUP, boom, came screaming down. That's why oil screamed up, and that's why gold went up. All of a sudden, it's intact. It's pretty amazing, guys. So they brought the dollar down. We almost filled the gap down in this area. That is the 750 retrace. So let's see if this thing holds up. Man, this was clawing its way back up, and boom, they brought it down. Dollar down, market's up as well, and we know what happened the rest of the day. If you look at the, you can't see the dollar here, but right when the Fed, if you look at the 10-minute chart, right when the Fed announced what they do, drop the dollar down, market's up, oil up, and gold up as well. So, pretty amazing. These are the central bankers, guys. It's not me or you moving the dollar. This is some big money moving the dollar, and that's the bottom line. Dollar down, everything tries to get a bid. So just keep an eye on this one here. Let's see if we fill this gap tomorrow. Do we gap above it or below it and continue down to possibly 25.80, or do we get down to double bottom here and then possibly keep going down to fill this gap down here at 25.59? We'll see. Right now, still okay, still slightly slightly bullish, slightly bearish coming down. Nice retrace. He had a nice outside bar today. Almost filled the gap. So does this one like gold or the Jnug, where you were down big, and does this reverse and shoot right back up? Tomorrow, Friday, we'll know. We'll know more as they give us the pieces of the puzzle. We'll try to put them together and figure out which way these markets go. Now the GLD, this one went up pretty good. That dollar down, gold up, got back above the 50 MA, filled the gap, right to gap window. That's where it's closed. So let's see if this one continue up. It's down 17 cents after hours, not a big deal. But what a nice push up today. Does this mean higher prices? Possibly. But again, we got to see what happens. See if it goes sideways. See if it pushes up one more time. I need more information on the chart to really figure out which way this thing's going. But right now, we had a nice reversal. Doesn't mean it can't click over and come right back in. Jnug, we've been talking about that. A lot of people in that one. And what a roaring, soaring session today, up 33%. So this one's back into resistance up here. It's down a little bit after hours. But man, this was just, I think, just a screaming short squeeze. Some buyers in there. But for me, got resistance here. You're going to have big resistance up in the 880 area, 870 area, $9. So just be aware that it's got to get through this area, the 914 or so, to keep going up. So once it gets into this, we'll see how it reacts, and we'll take it from there. So right now, nothing wrong with the markets. Couple things pulled back today. Nothing crazy. Tesla got some news. MLM, that one came in a little bit, but mostly all green across the board. There were a couple of weak equities, but nothing big. I'm just tired from last night. We did a live session, went for a couple hours, went through a lot of different stocks, talked about Janet Yellen today. And again, like we said yesterday, dollar might go up, dollar might go down, but apparently it looks like dollar down, market's up, and that's the way they want it. They want this thing to keep going, even with the with the free policy money or free money policy disappearing. Who knows? Maybe it goes on another year, but honestly, who knows what happens behind the scenes with these guys. So, all right, guys, that's it for today. If you have any questions or comments, send me an email at StockBookie.com. Again, sign up for my website for more videos like this if you enjoy them. Hopefully, I'm helping a couple people out there on making good trades, making good decisions. A lot of people were ready to give up down here on gold, and we just stuck with it. We knew it was coming to gap fill, especially on Jnug. But if you go back to gold real quick, you came back down. You almost filled the gap right here, and it was like, all right, let's see if this thing consolidates and another week or so, and then possibly down, but it didn't pop right back up. It doesn't mean it won't reverse and come right back down. Now we're looking at some more follow through. This thing follows through. Jnug should start ripping again, and like I said, I think we go right back up here and start rolling. But let's get through these areas of resistance first, and then we'll talk about where this thing can possibly go. So all right, guys, thanks again for coming to my videos. God bless. See you on the charts.